Alrighty, good morning, everybody. It is Wednesday, February 19th of 2025. We have a pretty good lesson to go over today. Looking at what happened here yesterday, I want to talk about kind of catching, and you guys were here when I put the entry in and you had time to actually jump in with me. But I want to talk about how I captured the high of the day, took on maybe less than a point of risk, and that was it, right? Especially if I had runners, you guys know I was a smaller size, just took a scalp down to the roadmap level. But I want to show you what gave me the confidence to actually get short from the high before the market opened, and how that ended up, and why there were good clues that this very well could have followed through for a much bigger rotation. So we'll look at that. And I did just want to zoom out and show you, so that vertical line here was the open. So I did get in before I got in while we were doing our pre-market planning session. And then I did get in later. We can look at those as well. But I did want to zoom out and just kind of show you guys that out of the open here, you can see we came right to the first roadmap level, got a beautiful bounce, came down, got another beautiful bounce, basically to the tick off that next roadmap level, where we got the rejection right off the 200, and then bounced through to get the rejection off the VWAP on that second bounce. And then as they failed from VWAP, they came down, and the low of the day was a double bottom to the tick off our roadmap level down there at 61.18. I guess it bounced one tick in front. And you had, if you were watching this in real time, you should have noticed as we came down into that major roadmap level, bouncing one tick in front of it, there was a huge bullish divergence there, and I believe it was also on the higher time frames. So again, I probably would have been sitting here not getting filled one tick away, but just to show you the accuracy of these levels, it's day in, day out. We fail again in the overnight session. Unfortunately, not off roadmap level in this case, but come down, get the biggest bounce of the morning right off the first roadmap level, fail from VWAP, and then come right down to the low of the day, which was our next roadmap level for the bounce. And they pushed the market and closed basically right where we opened. So as you guys know, in terms of physics, there was zero displacement yesterday, even though we did have good opportunities to make money to the downside and some good opportunities to make money to the upside. So let's go ahead and get into this brief lesson here. First thing I want to talk about is the actual level. So I do kind of want to put a disclaimer out there that 9 times out of 10, my trades are coming right off a roadmap level, whether it is one of the higher time frame levels that we're using, our major eye levels, our scaffoldings, or our SNRs, or the shorter time frame stuff off of our moving averages. So like I said, 9 times out of 10, I'm getting in on a trade right off a roadmap level with divergence, typically noticing some previous major structure in the market from that area, and then capturing that move. Or I'm looking for a more aggressive entry once the market starts to move in a direction that I expect based off my signals, and then I jump in off, say, the back end of an FMA, assuming I have the signals that I want. So let's look here. So again, I do have to kind of admit here that I went back in the charts and I did find something going on right here, right? So we don't have a major roadmap level on our charts. It's not in our news report, but I do want to show you when I zoomed back, because as we came into the open yesterday, this is kind of what we were looking at here. The market had pushed up to test the overnight high right there. I noticed there was a rejection in the overnight right there, a rejection right here, just before we started, an hour before we started our broadcast. And then just as a half hour before the broadcast started, we pushed up and we made this additional divergence here, right? We got the peak to a slightly higher high. Okay, great. That's a 512 chart. And admittedly, in the overnight, sometimes this looks more like a 3-minute chart. It's not a high time frame signal, right? So this is a signal that maybe I could have faith it's going to come back and test into the FMA. And I have about a 3-4 point opportunity there. But an expectation for a major reversal is typically not because just the 512 shows a signal. We know this 512 gives us pinpoint entries in the market right off these levels with signals on the in terms of divergence that can turn into much bigger moves. But typically they only go for a couple points before we get another counter signal and a rotation on these short time frames. So what did I see up top here? As again, we're testing up into this 57 area. So first of all, let me just explain why this level stuck out to me. So I went up to my higher time frame charts, and this is as I'm preparing my morning plan, right? So as I'm putting together our news report, I'm watching this and I'm noticing all this resistance here. So I said, well, let me go up to my higher time frame charts. And again, this is what the charts looked like yesterday on the hourly time frame. We had got the bearish signal from the overnight high, a nice bullish signal for the bounce off the roadmap level. And then we were finding potential bearish divergence up here. Again, as you can see, there's kind of the double top or slightly higher high, but the RVI was much lower. So whether it was a double top or a slightly higher high, we still had divergence going on, right? Okay, that's good. So my slightly higher time frames is giving me a potential signal, but I wanted to jump back and look at what was happening right around 57 here in the past. And if we jump back to the end of January here, you can see the market came right up into this 57.55 area, up into 55.75. So there was something right around here. Okay, not the most convincing. But then I went all the way back to when price was up here in the past, and this is going all the way back to December of this year. And again, here's 55. And notice what's going on right there. And maybe it was 55. I'm sorry, it was 55.5, not 57. So 55.5, I noticed in the past, every time the market came up to that level, you can't see it in here because it's really messy, but it did come in there and fail off of it. They did come in here and fail. They did peek through and fail there. They did come over in this area, and all this chop, look at all these hourly candlesticks coming right around 55 and failing. And then they fall out and come right back to 55.5 here. And then later on, and a couple days later, they come back up and they come right to 55.5 and they fail again. And then you can even see from a 60-minute perspective, we have the candlestick opening and coming right to 55.5 and then failing for the pullback. So I noticed all that interesting stuff. You can even see it here, like all this resistance. Bam, 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 fail, back to it, fail, back to it, fail. So you can see there's definitely something going on in the chart right there. So, let's just go ahead and mark that with a horizontal line and go all the way back to where the market was testing yesterday as we came into the open. We were testing basically right up into it. And again, we had our 60-minute showing bearishness up there. We also did have potential bearishness on our 4-hour chart, which is a much higher time frame up in that area. So as we were testing up into, again, there's that 55.5 area, somewhere just about there. As we're testing up in there, this 4 hour is giving potential bearish divergence. So I've got 4 hour, I've got hourly. Now, what I've been doing lately is really relying on my 30-minute chart and my 15-minute chart to come in alignment to find the larger rotations in the market. And so when we came in to that 55.5 area, here's the 15-minute chart, there's 55.5. We had come up, we pushed to the slightly higher high. My 15-minute was showing major bearish divergence potential. It had not followed through yet. Potential on the 15. And if we go over to the 30 here, there's that overnight double top. There's our 55.5. And when the market pushed up into that 57 level, you can see there was divergence going on from the previous swing, major divergence. So what I did was I went down to my short time frame chart, my 512. Oh, and by the way, the 3-minute also in alignment with what we saw in all the other time frames here, except now I didn't really care about comparing this swing to this swing. Now I can zoom into my 3-minute here and see, are we getting divergence from the actual major swing high when we peaked up through that 55, 57 area? And sure enough, there's the big bearish divergence from that area. So I had 3-minute bearish divergence. This is what my chart looked like on the 3-minute. I had my 15-minute bearish divergence up off this high. So there's the swing high on the 3. There's the swing high on the 15. So again, showing bearish divergence potential. And then again, the 30-minute chart had that potential bearishness. In fact, very, very glaring here as we pushed up, and this was way down here. So every time frame that I look at, 3-minute, 30-minute, 15-minute, hourly, all were showing potential bearishness, and we were testing right into this 55 half area on the chart, basically right there, that to me looked like a pretty good resistance. So I took a little bit more risk here because it is not off a roadmap level specifically, but I did notice as we came down here on the short time frames, there was that bearish divergence from the high, and then we started pulling back. And so right here, as we were getting all this little choppiness in here, I went ahead and got short, and then that third little swing high here gave me all the confidence in the world that, oh yeah, this puppy is going to fall, right? Because when you see that type of triple top, you see this pushing higher. If this ends up falling down through the low of the candlestick, there's my confirmation. There's the hook. To me, when I was watching this in real time, I was like, okay, that's exactly what I want. This is most likely going to go and pull back now. And I think I told you guys as we were doing our pre-market broadcast, and this all transpired. We got in. I started my broadcast at 9 a.m. and it parried back and forth. That gave me the stronger confidence this was going to follow through down through the FMA. And then as we did our broadcast, you guys saw I got filled, right? That ended up being the high of the day. So if you zoom all the way out now, the market open, we had already sold off 15 points from where I got in here at 56. And how much risk did I really have to take? I guess just over 2 points if I wanted to keep my stuff off the swing high. But I do want to mention here, guys, how I manage my trades once I'm in. When I saw that third swing high there, that was my new divergence. Technically, if we have divergence from this swing, price should not be going back through there. So my stop originally came up to probably 58.25. And then once this triple top started, and then we got the confirmation of the failure back down through, I left my stop right above that swing. So now I'm talking about quite literally 1.25 points of risk. And then again, you guys know I took some off and then took my final position off at the roadmap level, because we all know how often the market comes right into a roadmap level and comes all the way back. And I didn't want to give away the rest of my position there. We were in the pre-market. I figured I'd just take some profit. Now, hindsight is always 20/20 here. Had I have really been confident, well, and threw a bunch of extra contracts on and gotten aggressive, well, you guys know I probably would have made my money for the month there on the sell-off. But no sweat off my back, because I was able to get back in and get short from 41 down to 37 there. And then from the 200 here, this was an absolute textbook short opportunity for anybody who's familiar with our trading strategy. As we continue to sell off stronger and stronger, they come back for the first test of the 200 moving average. And what do you know? We get a double top. Oops, wrong button. Double top right off of here, and even right there, you have all this divergence. So that first test, you should have seen that divergence there. Second test, as we kind of complete that pattern, comes back, there's an additional divergence off the high, and then I hit the button. So from there, I got a really, really nice trade. I did keep my stop up above here. Luckily, I didn't close out my trade, and I got a beautiful sell, another 10 points down. So I didn't hold for the ultimate low of the day, which I think was all the way down at 61.18 here. But as you see, guys, you know, sometimes you hold on for a big runner, and then it bounces and it'll come all the way back, and you just gave up on that nice 10, 15 point runner. So I do like to take stuff off, and with using the, what should I say? Using my statistics, understanding that, you know, grabbing 10 points out of the market might be better than trying to hold on for 15, especially if it's going to bounce and come back. So I grabbed that 10, and that was it. I had a really good day. Now, like I said, if you missed out on shorting up here, which you had time here because when I gave you the short, when I told you I was in, you had all this time here for about 10-15 minutes to also join me in that short. And you should have recognized that bearish divergence from up here, keeping your stop maybe at 58, getting in maybe 56. You had plenty of time, and then you would have nailed the high of the day with me. But again, I think the overarching thing that I want to leave you guys with is that this short up here was not just because I had a 512 short time frame divergence. I knew there was something going on at 56, 55 half. I knew I had a 3-minute bearish signal potential. I knew I had a 15-minute. I knew I had a 30-minute and a 1 hour, and even a 4 hour arguably. So it kind of gave me confidence that this could be the beginning of a pullback. Now, I was more on the bullish side. If you guys remember, in our pre-market yesterday, I was more feeling like the bulls were going to try to continue to push. Of course, we talked about the potential for a pullback, and we all know that on the short time frames here, when we start to see price get back below VWAP, back below the 200, we get our crossovers, things start to become clues on the shortest time frame possible that this could be the beginning of a larger rotation. So even though we did expect the bulls to jump in on the pullback, you still had opportunities to get short because everything was starting, all the short information was starting to show its face. All right, so again, on the other side of things, if you were a bull and you were looking to buy on the pullbacks into our roadmap levels, you should have made money on the first one. Actually, the first and the second. The third here, you didn't, the previous daily low, but you did almost to the tick off our SNR. And then finally, again, there were two opportunities, and then finally 2 opportunities. Again, did bounce 1 tick in front, but from that final roadmap level there, right? And then on the way up, just to kind of finish this up here in terms of a review for what happened yesterday, we did get kind of the push to new highs. There's the pullback into the 200 after the first crossover there. We come right to it, bounce off the previous daily low to the tick with the double bottom. And then from there, you could have got in with almost no risk from 31.5 and got yourself a nearly 20-point push right back to 61.51 at the end. I'm sorry, that was in the overnight. But almost right back to 61.51. Hopefully taking profit along the way around 38, around 44, maybe 46. And then finally, it never made it to the ultimate high or the next roadmap level. So that was that, and now here we come into this morning, and as you can see, pulling back. This was actually a trade I would have been proud to say I took this morning because I actually was at the screens here. It inched up right to the 200. I noticed the divergence. I saw it there. I just hesitated. I kind of wasn't sure whether, and this is the thing, sometimes we have levels all within kind of a 2, 3, 4 point area. So sometimes it's hard for me, and especially in these instances, sometimes I just say, all right, I'm not going to trade in this area. But I didn't look at my high time frames, and sure enough, there was, if we go maybe to the 3-minute here, and I show you why I kind of was a little disappointed for not trying it. It's because we did, I don't know if that's a high enough time frame here. Let's do this. We'll go to the 30-minute here. So when we came up here this morning into that, there's the roadmap level right there, and then again the 200 was coming down here on the short time frames. I did notice that we did have this kind of naked swing right there, that a lot of times I see these kind of things on the chart, kind of like this swing, bam, then we cut through it to the downside, cut through it to the upside, cut through it to the downside, then we come back up into it here, and like they come right to it and then fail off of it. So I saw that little structure there. I saw the resistance right here. I saw the VWAP. I saw our roadmap level. I saw the 200. And I saw the potential divergence here on the 512. So that would have been, again, if I had the gall to go ahead and just put it on. Again, how much risk? Either I got filled to the tick off the roadmap level, or more than likely, I would have been filled at 200 in between them at 45 half. And I would have taken on 2 ticks of risk and then gotten this whole sell-off. But I didn't do it, right? So again, just another example of a really nice opportunity. You have your divergence, you have the test of a major roadmap level That's the first test of the 200 after the crossover, right? Which was something we teach. And I would have got in with almost no risk and easily gotten a 10-point sell-off from there, right? Probably taking profit here first, but my runner would have given me that nice 10-point fill. And as we come into the open now, what do you know, my friends? We are stair-stepping right down our level. So we hold the high the day before in the overnight. We fail down. We hold the back end of the roadmap level to the tick. And now as we come into the open, we're holding the back end of this roadmap level nearly to the tick for the pullback. So, you know, my friends, this type of price action off our levels, there's nothing you're going to find anywhere in the world that's going to be any better than this. I've spent time in trade rooms with people that have been trading for 30 years, and they ain't got shit on me. Okay, I've been doing this for maybe under 10 years here, but there's absolutely nothing that's going to give you entries with no risk directly off a level that gets you potentially a 100-point rotation in the market, right? The issue is we don't know which level is going to be the level that leads to a major pop or not, but we do know when our signals line up from an area or from a level, it has a very good chance of becoming a major rotation. Again, this is where everything lined up for the bears, and that was the high in the major pullback. And then I didn't even look at the signals down from the lows here yesterday, but if you look at the signals from the lows, also higher time frames lining up right there. There's the roadmap level. And again, if you got in, or you got in on that first pullback to the 200, still made 10, 20 points off that trade with almost no risk. So let's go ahead and jump up to the higher time frames, see if there's anything new to add to the picture this morning.